Hey guys, it's Barry Page, and today we are going to try to answer the question, do qualified plans save taxes? And qualified plans are your 401k, IRA, etc. So there's many types of qualified plans, SEPs, 401ks, IRAs, and the like, 403bs. You may have one of these at work, you may not. But there's many different types, and they're basically all government qualified plans. That means they're qualified by the IRS. Now, I should let you know that I'm not an accountant, a tax attorney, nor am I rendering tax advice. This video is for educational purposes only. You should always consult your tax advisor when you need tax advice. This is simply for education, and I'm going to show you the numbers of qualified plans and how they work. So here's what you need to understand. Qualified plans do two things. They defer the tax and they defer the tax calculation. So you will pay taxes, you'll just pay them based on what the IRS says you owe them at the time of withdrawal. So the question becomes, what tax bracket will you be in at retirement? Now, there's, again, lots of misinformation out there about this. Many CPAs and accountants will even tell you you'll be in a lower tax bracket at retirement. Well, if you just think through that logic, you're not going to have a lot of tax deductions probably at retirement. If you have kids, those deductions will be gone. If you have a mortgage and you follow traditional financial advice, your mortgage will be paid for, so you won't have that deduction. And if you think you're going to be able to live on less income than you are today, then you're just saying you're going to be poor or live a decreased lifestyle from today. So, then the other question is, what bracket will you be in? Well, if you just look at the tax thresholds here, since taxes were created in 1913, they have changed dramatically. And, for instance, in 1922, the top tax bracket was $200,000. It went up to as much as $5 million in the 40s. And, if you look here in the 90s, it was back down to 86,000 was the top marginal bracket in 1992. So the government, the IRS, change these brackets quite frequently. As a matter of fact, as you see here, just about every year. Today, the top tax bracket is 39.6, plus you get hit with a Medicaid, ACA tax as well. So that is these are the tax thresholds. Okay, so today you have to be making 466 to be in this top bracket, but these brackets can change as they do frequently. So another question is, if you just look at tax history, do you think taxes are going to go up or down in the future? Well, over our lifetime and over since taxes were created from 1913 to 2016-17 that we're in today, the average is about 58%. So the fact that we're in a 40% bracket today for the highest bracket, highest marginal bracket, is in fact low compared to the average of history. So going back to this, one last question you have to ask yourself: what deductions will you have when you take your money? And of course, we don't know. So these are uncertainties that you have to ask yourself. What tax bracket will you be in, and what deductions will you have when you take your money? So let's just take a look at a calculator. And remember, qualified plans postpone the tax. So if you contributed $18,000, which is the maximum you can contribute to a 401k in 2016, and you're in a 30% tax bracket today, and assuming that taxes never go up, they never change, then you'd be in a 30% tax bracket later. And if you're, let's just say you're age 35, it really doesn't matter. But if we took that out to age 65, 30 years from now, and you got a modest 5% return on your money, then your account balance would grow to $1.255 million. Now, you got to pay Uncle Sam. And the amount due on that in that same 30% bracket is $376,000. But what you have to consider is that you only deferred 162,000. So you deferred 162,000. That's 18,000 times 30 years, and then you owed 376. So did you really save any money, any taxes? No, in fact, you're going to pay more in taxes than you deferred, because while your money is growing in your account, it's also growing in the IRS's account. So just a little lesson on qualified plans. I hope you were able to gain some value from that, and I'll look forward to seeing you in another video.